Welcome back, traders. I appreciate your coming to this channel, and I believe you are going to gain more in this channel. So I advise you to stay and make sure you watch this video to the end. And I'm sure you are going to gain a lot from this video, especially the newbie. I'm Larry Fabi. I'm a trader and I'm a teacher. Today, I'm breaking down the key smart money concepts that every trader must know. Today I want to talk about order block, fair value gap, liquidity sweep, and premium and discount zones. These are real tools big boss use, and I'm going to show you all how you can spot them and how you can trade them. So please stay tuned. So now, when we talk of order block, what is order block? What is order block? What is order block? Order block is usually the last candle before the impulse move in the market. The last candle before the impulse move in the market. Let me show you. Let me show you. Let me just show you. Look at this impulse movement. Look at this movement. Can you see this movement from here to here? We call it impulse movement. So the other block here, let me mark it. The other block is this last candle. Most times it can be opposite candle. It can be green candle, or it can be red candle. That is, it can be bullish candle, it can be bearish candle. You look at this. We have a bullish candle at this point. Look at this place. We have a bullish candle at this point. This place, this candle is order block. This is the last candle, last bullish candle. Before what? Before the impulse movement. This is impulse movement in the market, and that is order block. And what is the importance of this order block? The importance when we are studying it shows the actions of the big boys. At this point, big boys have placed a sell order, and whenever price gets back to this level, there will always be a reaction of price. If this level hold, this level will stand as a resistance for price, and the price will always go down for that level. So that is why order block is very, very important. Don't worry, I'm going to show you how you are going to use them to trade. Let us spot more order blocks. Let me go to higher time frame. Let's go to 4 hours time frame. Let's spot some of the other blocks. Look at this. This is another one. This is another other block. And see this place. This is another other block. This is another other block. And see impulse, the last candle. I told you it might be bullish, it might be bearish candle. Just the last candle before what? Before impulse movement. You can see this candle before impulse movement. And look at what happened when price get back to that point. There's always reaction. You can see the reaction of price. Price traded down when it got to the other block. Let's check other block out. I want you to know how to identify them. And after this video, please go and try to identify other block. They are what? They are very, very important when it comes to forex trading, because these are the actions of the big boss. And we are these big boss, the big banks, the financial institutions, the hedge funds, and so on. That the what? That the big boss in the market. So these are, look at what happened to this point. After this candle, you can see the impulse movement. Most times when price trade down to this level, there are always reactions. So that is the reason why we are studying order block. So let's go to the next one. Let's go to the next one. The next one is fair value gap. Fair value gap. What is fair value gap? Fair value gap is the gap between candle due to imbalance in the market through the what? Price inefficiency. Is a three candle formation. It shows the imbalance. It shows the impulse movement in the market. So let's just stop it. Let's spot them. Let's spot them. I told you is the gap between candles, three candles. You can see we have 1 here, 2 here, 3 here. This gap between them is what we call fair value gap. And why are we studying fair value gap? In fact, among all the institutional tools that we are talking about today, fair value gap is very, very important. Fair value gap is very, very important. That's the reason why whenever the price get back, price always want to refill that gap. You can see from this example, price came and fill up this gap. Price fill up this gap and move boom up. So most time, fair value gap is very, very important because the price will always come back to fill up this gap. And that's the reason why we are paying attention to this. If you look at many of them, let's check fair value gap. Just I told you, it's most time I spot another very good fair value gap here again. But this one bullish fair value gap. You know, we do have bullish fair value gap and we have bearish fair value gap. Look at this one. I spot this another one here. That's fair value gap. When price traded back into this gap, price came to do what? To fill up the gap. And after the filling, price just move up. From there, price just move up. So fair value gap is a tool that is very important to understand. So let's go to another one. Liquidity sweep. Liquidity sweep is when price run above the existing high. Price cut above the existing high. We call that liquidity sweep. Either cross above the existing high or cross below the existing low. We call that what? We call that liquidity sweep. Most time, if you look at wherever you see where we have the equal high or equal low, check it very well. There always liquidity sweep at that point. That's you see liquidity sweep. You can see this candle. You can see this candle. This candle and this candle, this swing and this swing and this swing, they are not the same. You can see that there is liquidity sweep. And what the brain behind this? This is this at every swing high or swing low of every market. They are placed the stop loss and what? And we always have a stop loss. For example, most of the people that are selling in this place, they are putting their what? They be putting their stop loss at this point. You can see what happened. The price will go higher, despite the fact that the price is still coming down. Look at what happened in the liquidity sweep. You can see this. The liquidity sweep. Or most people that are putting their stop loss at this place when they are buying, we call this buy liquidity, buy side liquidity. I call this sell side liquidity. And so most of them that are putting their stop loss at this point, you can see this candle. We call this sweep. It sweep the liquidity, and you see the price may trade up again. So that is why are we studying liquidity sweep? Why do we need it? What's the importance of liquidity sweep? It's very important because most time when you see price behaving funny, when you see a price that's supposed normally the price is in uptrend and still you see the price trading down, it's going down to sweep liquidity, to cut off some of the stop loss that are placed under the swing high or swing low, other placed under the swing low or placed above the swing high, in order to claim those, to take off those high. And after taking off those high, the price will resume its normal direction. So you can see them. We have many of them. You can see them all over. You can see them. Look at this place. This liquidity sweep. You can see what happened there. This you can see it there. It was stripped and the price moved down. Together, price will always take off the high or take off the swing low and resume its original movement. Then let's talk about premium and discount zone. Premium and discount zone. This is another effective SMC 2. How do you get our premium and discount zone? All you need to do is just to get the price range. Find the most recent swing high and swing low. Then what you need to do, when you get the most recent swing high and swing low, then you play your fib 2. This is my fib 2. I just put it to this place. If you look at this very well, we have 50% there and we have 50% at this place, and this middle is the equilibrium level. So smart money, these big boys, you will not see them buying at premium, and they will not sell at discounts. For example, you want to enter a sell trade, a buy position in this, you look out for buy opportunity in this place at what? At discount. When you want to sell, you look out for what? For sell opportunity at premium. That is telling you that premium is got you use premium zone to look for sell opportunity, while you look for discount zone to look for buy opportunity. So in all this, how do we apply this? How do we apply all this that we have learned? How do you apply? How do you combine them to trade? When you want to combine this, all of this to trade, first of all, you must identify all this in your higher time frame. Depending on the kind of trader you are, you must identify all these tools in your higher time frame, and you must understand break of structure before you decide either to buy or to sell. There must be what? You must identify break of structure. Let me try to talk about that. Let's start from here. Look at this market. But in this market, you have this break of structure down to the downside. You have a break of structure from this point to the downside. It's a break of structure to the downside. You have another break of structure from here to the downside. Are you getting it? You have another break of structure to the downside. So if you are looking for buy opportunity or sell opportunity in this kind of market, you are going to look at it. At this market break structure from this side to this side. So that is telling you that when you just take out, I'm just showing you an example, you just take out your fib 2 and just put it in this place. So that is telling you from this point, you'll be looking for what? For sell opportunity. I didn't mean you want to sell from this side. You'll be looking for what? For sell opportunity from this premium. So one thing you need to do after you have identified all this in your higher time frame, the second thing that you must put in mind, and that must be what? Break of structure or change of character. Change of character simply means when price change direction. As you have it here, this price was downtrend until the price got to this place. And it got to this place. We now have what? Now we have uptrend from at this point. We have uptrend for this point. So we are looking for buy opportunity. You are just going to put in your feet from here to this place, and you'll be looking for buy opportunity at this point. You can see the markets are approaching our what? It's approaching our discount zone. So we are going to look for buy opportunity at this discount zone. And I tell you that if you must consider higher time frame when you are spotting all these tools, it must be on your higher time frame, and it must be what? There must be break of structure. There must be what? There must be break of structure. And when there's break of structure, then you now look for other block that has what? Like look at this place now. I have other block here. In fact, this is the other block that creates this break of structure. I have other block, this other block that creates break of structure. Another thing That is very important. A good order block must have fair value gap, because we know that fair value gap is a magnet that that magnetize price. Do you see that? So though we don't have point, look at this reaction of price. Look at it. When price got to this point, look at how price is reacting. Look at how price is reacting. So how price is reacting. So what you need to do, you need to wait for the price to get to this place. And this place that I mark now serve as a what? Area of interest. All you need to do now is just to wait. You go back, you go to 15 minutes candle. When you get to 15 minute candle, then you can see it is in the area of interest that we have just marked. So what we are looking for now, we are now looking for break of structure to the upside. When we get break of structure to the upside, that is telling us that the price is going back, has resumed its original trend, meaning that the price is going up. What we are just waiting for here, we are waiting for break of structure. If you see break of structure, is a confirmation that the price is going up. Then we now look for buy entry. Please note this. When you want to use all this that we have been talking about, make sure that you spot fair value gap, order block, liquidity sweep, in what, and discounts and premium zone. Spot them in higher time frame. When you get it, the next thing you need to look out, that is very important. There must be either break of structure or change of character. After you have gotten that, and your break of structure, then you now look forward. You now look for fair value gap and order block. Your fair value gap and order block, they are very important. When you spot in order block, your order block and it has fair value gap on top, depends if you are buying or below when you are selling. It is an A plus setup. So you have gotten that. Quickly you switch to your 15 minutes or your entry time frame to look for either buy order or sell order. So I think, guys, we have been able to discuss some of the important tools of the smart money concepts. I believe that if there's anything that you still don't understand, please feel free. Just comment, like this video, share it to others, and follow me for more. If you are not subscribed, you are just one coming to this channel, please subscribe, because I believe you are going to gain a lot of things from this channel. Thank you.